Welcome to this video, which is all to do with Forex day trading and scalping for beginners. And what I want to do today is look at a real problem that short-term traders have. And by short-term, I mean anyone using under an hourly chart. Now, in terms of what you need to understand in relation to short-term trading strategies are the probability of the outcome and the expected payoff of the trade, and what this means will become clear as we go through the video. Now, in terms of most people, they're attracted to day trading and scalping strategies because, yeah, the premise is that you can keep losses small and have a high frequency of winners. And you'll see a lot of people promote, scalping or day trading strategies with, trades being right over 70% of the time, or even 90% of the time. However, the actual amount of trades that you get right has got nothing to do with the profitability of a strategy. Okay, if you're focused on just getting as many trades right as possible, you're probably going to lose money in forex trading. Now, what I want to do is just discuss all this in more detail, particularly probability of outcomes. But what I want to do first of all, just show a summary on a quick storyboard. It'll only take about a minute and a half. I want to introduce what is known as the Babe Ruth effect, a very important psychological theory which is called prospect theory, and then expected value or payoffs for investments. And it could be any investment. Okay, if you don't understand the mathematical example I give, don't worry, I'll explain it when we come back. So just take a look at this quick storyboard. I'll be back in a moment to discuss in more detail. Welcome back after that short summary there. Now, in terms of Babe Ruth, keep him firmly in mind. We'll discuss a little bit more about high probability trade setups later. But in terms of Babe Ruth, he didn't strike the bull that much. Plenty of other baseball players, swung for the bull more than he did. But no one was as effective, at getting those really big hits as Babe Ruth. So what we want to do is basically focus on big hits, big trades, high probability that offer us good risk to reward. Now, in terms of prospect theory, it's a really interesting theory. They proved it in numerous examples, how loss averse we are as humans. We just do not like taking losses, okay? Now, in terms of that example I gave you from Nassim Taleb, you don't actually need to know the mathematics of it, okay? But what you've got to keep in mind is the probability of the trade coming right in relation to the risk reward that you have to take. Now, to give you an example, I've seen, plenty of currency pairs. I think, there's probably about 70% or more chance of that going up. But my reward against where I have to put my stop might be that I've got less reward than the risk I'm taking, or the same risk rewards. And I just don't want to take those trades. The probability might be high, but there's no risk reward for me on those types of setups. Other setups, reversals, I can get really good risk to reward. I'll come back to my favorite trade setups a little bit later on. Now, in terms of, if you're day trading or scalping, most traders are attracted to this form of trading, short-term trading, because they think they can trade with low risk and make lots of regular profits. Okay, in terms of day trading and scalping strategies promoted online, they'll normally say they win 70% of the time or more. Many claim 95% or more of the time. Those track records are made up. Okay, but it's one of the biggest myths of all that short-term trading is low risk. It's actually high risk. Why is it high risk? Because there is no way of calculating the probability. Chart setups in longer time frames might be valid, but in minutes or an hour, they're just not. So why not? You've got to think about Forex markets. They're not just people speculating and trying to make money. The Forex markets facilitate global trade. Huge amount of transactions go on every second of the day. And some of them can be really big, like Apple might be moving billions across borders. There might be a government, doing a big defence project which they have to pay for. Then lots of other transactions, people buying houses, going on holiday, maybe buying goods across borders. You cannot tell when those trades are coming in the markets, and they'll just create random noise in short time frames. So you can't get the probability on your side. Now, in terms of day traders, I've seen numerous studies on this. They actually have a decent percentage of winners. Okay, I think most studies that I've seen, it's around 50%. Highly respectable hit rate, but they can't make money. Why? Because profits never cover the losses, and also they have high transaction costs, i.e. spreads, which really mount up if you trade frequently. So in terms of day trading or scalping, the charts look orderly going backwards, but those patterns are only obvious going backwards, not when you try and trade them going forwards. It's all random. Okay, you need to avoid day trading or scalping strategies in short time frames. You can get the odds in your favor in longer term time frames though. And I want to just very quickly, before I discuss this in more detail, what type of strategy you should use, just want to do a quick summary board again. And this is in relation to Edward Thorp. He was actually a very successful blackjack player, probably the most successful of all time. And he basically then used the probabilities of blackjack, what he'd learnt, to become one of the greatest Forex traders ever. So just a quick summary on the similarities between trading and blackjack, and basically what you can learn from playing blackjack and how that could be translated into a Forex trading strategy that can make you money. And it doesn't have to be complicated either. So let's just do the quick summary, then we'll be back to discuss. We'll go back after that short summary there of the similarities between blackjack and trading, and also the differences. Now, said earlier, obviously, if you're trading in short-term time frames, you just simply cannot get the odds and probability on your side. You can, however, if you trade off bigger time frames. By bigger time frames, I mean daily and weekly support and resistance levels. They're the levels that big banks will pay attention to, hedge funds and commercial hedgers, for example. So you can get the odds on your side. Now, in terms of blackjack, one of the disadvantages of playing the game is actually you have to do the ante, even if the hands are not favourable to you. You have to play the game. You don't have to do that in Forex trading. In blackjack, thought notes that only 10% of the time, sorry, less than 10% of the time, the odds favour the player. The rest of the time, the odds favour the house, okay? It's very similar in Forex trading. Yeah, the markets are not always going to give you high odds opportunities. You have to be patient and wait for them. You can't force money from the markets. And yeah, Ed Thorpe makes this point, and so does Vic Spirandio and another great trader, Blair Hull. Yeah, they're two of the world's greatest traders. They came from a background of blackjack and poker as well. Yeah, patience is a very underrated trait for success. Okay, so be very patient. Now, in terms of blackjack, all the variables of the game are known. You only have a 52 card deck. To calculate the probability, all you need to do is count cards coming out of the deck. That gives you the cards that are left, and you can work out the probability from that. When you come to trade Forex, it isn't the case, because all the variables are not known, okay? You have to design a strategy that is subjective in terms of your view of probability and the odds. That might sound daunting, but it's not as daunting as it sounds. What you need to do is basically base your strategy on sound logic that will repeat itself, okay? Now, in terms of sound logic that will repeat itself with a high degree of probability, I'm just going to give you two ways of trading. There are many different ways of making money, but these two ways I think are really good for anyone who's starting out in Forex trading to go and investigate. Now, the first one, trade price spikes on high volatility when you get several candles, big candles, the upside or downside. Then go against the price spike. Obviously, you've got to time your entry correctly, but I find that trading price spikes and going contrary to them offers great risk to reward. Now, in terms of price spikes, just look back on a chart you wish, and you'll see that if there are big price spikes in short periods of time, you normally get a big retracement of the price spike. Okay, now, in terms of doing this, I tend to find that I could be stopped out 2 out of 3 trades and still make money. Why? Because the risk to reward is so good, the expected payout. Okay. Now, another great way of trading, in my view, this is to do with the fundamentals behind the chart. Okay, look for a tight price range, a very low volatility, sideways price action. Wait for a move up in volatility and go with the move in whichever direction it is. Why is that a great way to trade? Because the fundamentals have changed. When the fundamentals are in balance, currency pair will trade sideways. Then when they change, obviously you'll get that increase in volatility and a price break. Now, it's not going to work every time, but that strategy I've just said about trading tight price ranges has got a high probability of success, and also it's a good risk reward way of trading. First way we noted on the price spikes, that's just human nature. Greed or fear always pushes prices too far to the upside or downside. That's never going to change. And price spikes fade as well. Both those ways of trading, if you research, and we've done plenty of videos on trading strategies related to them, will get the odds on your side and allow you to have really good risk to reward. Now, in terms of blackjack, card counting works. It's been proven to work, very few card players can actually make it work. Why? Because of discipline. Discipline breaks down when they hit a losing period or a flat period, and basically they just cannot continue with the strategy. That happens a lot in Forex trading as well. Traders, when they hit a losing period, discipline breaks down. They want to override their strategy rules. I run a stop or put a stop too far back, or take a stop out, or cut a profit early. If you do that, you simply don't have a strategy anymore. You've got to get an edge that you are confident in, which is based upon sound logic that you understand, which will enable you to carry on trading with discipline through inevitable periods that are flat, or when you've got a drawdown. Discipline, application of the strategy is essential. Also, in blackjack, money management is the key to success. You do not bet big in blackjack. You keep plenty of bankroll in reserve. You should do the same in Forex trading, in my view. I don't believe that you should ever expose your account to more than 10% of risk if everything goes wrong. And I personally think that, in terms of Forex trading, traders use far too much leverage. You can make really great returns on just 10 to 1. Brokers probably give you 200 or 500 to 1. I think, if you approach the Forex markets with a blackjack mentality, you'll be focused on the probability of trades, the expected value or payouts, and you won't be subject to what's called the outcome bias. Many traders, when they get trade wrong or they lose money, think they've done something wrong. It's not necessarily so, because you're just trading probability. Any trade can go wrong. What you need to do is be focused on the longer term. Now, in terms of this video today, I think I've covered everything I need. If you are a beginner coming in the markets, avoid day trading and scalping, obviously. And research a strategy that's longer term and keep that blackjack mindset in mind. Also, I would strongly recommend you go and read Ed Thorpe's great autobiography, which is A Man for All Markets. You can probably see it on my shelf behind me. I've just finished it, read it for a second time. A wonderful book with great insight on how to trade successfully. So that's the video for today. Thank you for watching me as usual. Take care. Have a good day.